But the broader market, the S&P 500 is up sharply too. As of Christmas Eve, the massacre that we saw back on Monday, it was 6.5 points shy of bear market territory. Well, I'll tell you right now, we are not in a bear market after the nice gain we were seeing for the S&P 500 today, and the Nasdaq is up a solid 4%. Let's talk retail, because the solid numbers that we got from MasterCard Spending Pulse about this being the best holiday shopping season in 6 years, definitely one of the factors contributing to the rally today for the stock market. According to the National Retail Federation, 17% of us plan to hit the stores today to maybe buy some stuff, but mostly to return or exchange those unwanted Christmas presents. Hitha Herzog joins us now to discuss the many happy returns on top of one of the best holiday shopping seasons that we've seen. So we've got some great numbers here, but not everyone is feeling the Christmas joy. Can you just go through the winners and losers of this season on your list?
So I think some of the biggest losers that I was looking at, obviously, we're looking at Target had a massive downfall, although it is going to make my 2019 outlook. So we're going to talk about that in a second.
Okay.
But Macy's especially had a drop of 13% over the last quarter. In fact, retail stocks have had the worst quarter since 2008.
Ugh.
And again, if you look at it along with the S&P, it's performing right along with the rest of it. So we've had a pretty dismal month. However, retail stocks in general have not been performing well.
But this shopping, people are feeling richer come Christmas time, so they're making their money in the final weeks here.
I think people have been feeling richer over the last year, and especially over the last couple years, as people have been gaining momentum with the economy. Kind of seeing the economy get better and feeling better about their jobs. They've been feeling a little bit more of this pent-up demand, and they want to go out and spend.
Right.
So you're seeing people go out and spend. However, it doesn't quite follow what's going on with the retail stocks. So PayPal came out with a study. Americans have been spending, 47% of us have been spending online via our mobile devices and our computers, buying our presents that way. So that's certainly increased the top line growth for a lot of these retailers. But what we've seen, again, and Target I kind of call out because they've had dismal earnings. However, they used a lot of their SG&A to beef up that online presence so that people will come on and spend.
Right.
And we're seeing a lot of retailers do that.
Well, and if you have a brick and mortar presence, because everybody's battling Amazon,
exactly,
right? Who have put out very record numbers for Amazon. But if you have a brick and mortar, you got to justify it and give a shopper a reason to go into your store.
Exactly. So you're seeing a lot of these retailers do put on some fancy bells and whistles into their stores. For example, if you go over to Nordstrom, which is on my pick of winners as well, they really kind of hit the omni-channel retailing, and I hate that word because it's so jargony. But basically what that means is that people come in and you're able to shop via online, via in the stores, via other means, through, maybe pop-up stores down the street. But if you go into the men's store over here, which is up a couple blocks, they have a bar in there with flat screen TVs so men can sit there and drink and shop at the same time. It's more of an experience that they want to be a part of. And even some stores like Target have these charging stations from this company called Charge It Spot. They come in, they have, you can sit there and charge your phone for free while you're shopping.
Awesome. Yeah. All right. Well, we're talking about so many people hitting the malls to return today, but you can also do like the free shipping, free returning at so many of these companies too. Does that impact the bottom line of these retailers basically fighting for market share against Amazon?
They are definitely fighting for that market share, and they've baked into the price with all of these returns. So the general gist is about $60 billion worth of returns are going to be happening from now until January. So retailers know that that is part of the deal as people go out and shop. However, in order to compete with Amazon, they have to offer these things like free shipping, free returns in order to get that back. Will that have an impact going forward in earnings? I think other things will have an impact, the amount of money they're spending in order to get their shoppers in, but returns have already been baked into the price.
Your thoughts on JCPenney?
Oh, poor JCPenney. I think it's going to fall in the way of Sears. I think pretty soon, instead of us going there and getting appliances like we used to, 25 years ago with our parents, I think we're going to end up going there for surgery centers and maybe even gyms.
I'm surprised your call on Target, because this was the first Christmas without Toys R Us. And Target has a pretty impressive toy section.
They have a very impressive toy section. And what ended up happening with Target and Walmart, where they haven't disclosed this publicly, is that they took a lot of those toys that weren't being sold at Toys R Us and had them stocked in their stores. So that's why you saw this increase of toys, especially in the sections for Walmart and Target. But yeah, Target is really spending a lot of money on their SG&A, especially to get people to buy online.
Yeah,
so we're going to see that upcoming in the next couple